UK landlords and self-employed sole traders. If you've got absolutely no idea about making tax digital for income tax and what that might mean for you and your business, then trust me when I say you are not alone. There are lots of people that don't understand or know anything about MTD for income tax, and a lot of those people need to comply from April 2026. At the time of recording this video, it's the 9th of October 2025, so it's really not that far away. And so I feel like we need to do what we can to get the word out there a little bit more and help people work out if this is something they need to do, because the consequences of not complying when you're obligated to are not insignificant, and ignorance is not a defence. So let's see if we can enlighten a few people on what MTD for income tax is all about and who it applies to, when from, and a bit of an idea about what it is you actually need to do. So this is my flowchart. It's on my MTD hub on my website, and I will put the link for that in the show notes in case it's not convenient for you to look at the screen right now. I will read it out anyway, and you can look at it in more detail at your own convenience. So we start off, this really is only if you are self-employed as a landlord or a sole trader and in the UK. If you're not and you have no intention of becoming a landlord or a self-employed sole trader, then you're not in the scope of MTD, and I won't take any offence if you decide to scroll on at this point. If you are, then what we need to look at is your qualifying income from your 24 to 25 tax return. And for MTD purposes, that is your income from property and self-employment. So a lot of self-employed people have more than one income stream, and it is the combination of all of those self-employment and property income streams that determine the turnover figure that says whether or not you need to comply or when. It doesn't include other income like PAYE or dividends or pension or anything like that. So if you have those as well, and you normally would put those on your tax return, and you still will, but they don't determine whether or not you need to take part in MTD. So it's just the property and self-employment income. And obviously I am aware that, being that it's only October, there's going to be quite a lot of people that haven't yet submitted their 2024 to 25 tax return. And if that's you, but you think there's a possibility that your total turnover, and this is total income before expenses, not your profit, but if you think there's a chance that yours might be over 50,000 and you haven't done your tax return yet, then I would highly recommend that you get your figures up together and find out, because if you wait until January and file your tax return at the deadline, then HMRC write to you in the next month or two after that, but you will still need to comply from April. There's no extra time for finding out late. So the sooner you know, the more organised you can be, the less chance there is that you'll end up with any kind of penalty. So if you do need to comply from April 2026, then what you need to do is have your records held in digital software. So with my practice, we're 99% zero. So that's what most of my clients are on. They're already on the digital software. They're already submitting digital receipts to me or through HubDoc straight into Xero. They're already compliant with the digital side of MTD. So all they will need to do in addition to that is file quarterly returns to HMRC, which is, they're calling it light touch. It's just income and expenditure. And you will submit them through your software on set quarter periods, which we'll come to in a bit. So for most of my clients, this isn't going to be too difficult. They're already relatively, mostly on monthly bookkeeping anyway. So it's just going to be the returns that they need to worry about. But if you're currently somebody that just looks at your books once a year in January, files your tax return right at the deadline, then this will be quite a big step change. So it's definitely worth paying attention to what's going to change and seeing what you can do. Small steps now to start getting ready. So if you're not currently over £50,000 turnover, but you are over 30,000, you're the next threshold that will have to comply from April 2027. So you've got a little bit more time to get organised and figure things out, but not a whole lot. So it's worth staying on this video. It's worth keeping an eye on what it is that's coming down the road for you. If your qualifying income is over £20,000, but you haven't yet breached 30, then you need to comply from April 2028. So you do have quite a bit more time to get ready. So you don't have to worry about it just yet, but it is there on the horizon. So just don't forget. And if you're not yet at £20,000, obviously you might be by the time that threshold comes around in April 2028. But if you stay under, you don't currently have to comply with MTD, but there's also a very good chance that by the time we've completed those previous 3 thresholds, there'll be a date for you as well. So keep it on your radar. Don't just forget about it. Don't assume that you will never be brought in, because you probably will. So the next thing we need to look at is those quarterly returns that you need to complete. So if I just scroll down through my MTD hub, there are 2 different options for the quarterly returns, and that will depend on what is currently your year-end date. So if you ever had a year-end date that wasn't either the 5th of April or the 31st of March, then you'll probably be aware of basis reform, where HMRC moved everybody onto one of those dates if they were self-employed. All of my clients were already on the 31st of March, so we didn't have to do that. But I do know from other people that it was quite griefy. So hopefully you've come out of the other side of that now, and hopefully it wasn't too traumatic for you. But how we decide when you have to do your submissions, or the period that your submissions will cover, more accurately, is based on your year end. So if your year end is the financial year and it's the 5th of April, then this page shows when your submissions, the period that they cover. So as I said, they're light touch. It is just income and expenditure. It's not going to be full detailed accounts. I know some people think that a full tax return is going to be required 5 times a year, and that's not the case. The submission deadline is the same for both 5th of April year end and 31st of March year end. The only difference is these dates you can see, the 6th of April to the 5th of July for that first quarter. That needs to be filed by the 7th of August. And then the second quarter still starts at the 6th of April because they're cumulative, and that will go up to the 5th of October. So you're just adding on the second quarter's information to the first one. And that needs to be filed by the 7th of November. And then the third quarter goes up to the 5th of January, needs to be filed by the 7th of February. And the final quarter covers your whole year up to the 5th of April, and that needs to be filed by the 7th of May. Now, I will be recommending to all of my clients that they file within the month that it ends. So if it ends on the 5th of July, file it in July. Keep that week of August that you've got available as like an emergency backup. But if you have your habit that you file it in July, it's going to be a lot easier to keep on top of everything, because you now have a lot more things to think about. So 5th of July deadline, or 5th of July period end, file it in July. 5th of October, file it in October, so on and so forth. Then we still have the 31st of January tax return. Now, when I created this, it was being called the final declaration. It's my understanding that they have gone back to calling it a tax return, I guess because it's just more familiar to people with what we already know. That is still the 31st of January. The payment is still due by the end of January. That hasn't changed, and HMRC tell us there's no plans for that to change. So that's what we're going with right now. There's no intention for payment situation to be any different. And your final tax return, final declaration, whatever you want to call it, that will encompass all these figures you've already been submitting through the year, and any other income that you would normally put on your tax return, say if you do have any of that PAYE, pension, dividends, income, that kind of thing, that would go on to this. And as I say, it's still not due until 31st of January. My recommendation is going to be for my clients that they file it in June or July. June if they don't have a P11D coming. So if you don't get any, if you don't have employment with benefits and that you receive a P11D, because they come out, generally speaking, in July, but everything else, you should have it by the end of June. So if you make June your tax return month, even if you're employed, you would have your P60. You should have that by the end of May, so you should definitely have it in June. And any pension income, that P60 would come out to you as well by the end of May. Your figures will already be fresh in your mind because you've just done your final quarter in April, possibly up to the 7th of May if you've pushed that to the deadline. And then you can get your tax return filed almost immediately after that. Because what you don't want to happen, if you leave it to the following January, not only will you have filed Q1 and Q2 of the next tax year, but you may even have filed Q3. Because if you're doing it the way I would suggest, where it's filed within the month that it ends, so for the third quarter, that ends on the 5th of January. So my clients will be filing that in January, which means you'd file 3 quarters of the following year before you file your tax return for the year before. And in my experience, not having all of those quarters and doing your tax return in January, people get very confused of what the period is that they're actually dealing with, because they've moved on to the next year. So your 24 to 25 tax return needs to be filed by the 31st of January 26. So when they're in January 26 looking for receipts from back in 2024, trust me when I say people struggle with that. Not everybody, but a lot of people. And there's very little benefit to holding on. So you don't have to pay until the end of January. Just make sure you put some kind of safe note that you can't possibly forget to do it. Don't forget to pay. So for me, that would be a diary note on my phone. They're reliable. I know it's going to go off. It's going to let me know I need to pay. So I wouldn't want anybody to forget to pay, but by all means, leave that bit till the deadline, but file it early before your quarters start over again for the next year. Because my fear of what this is going to end up like, with people getting themselves in a muddle because they want to leave everything to the last minute. And there's no benefit to you to do that. So it might feel like there is, just leaving it and leaving it and leaving it. But then when it comes around, when life gets in the way and you end up missing deadlines for any reason at all, not many of them will be an acceptable excuse as far as HMRC are concerned, and you will find that you very quickly rack up the points that you need to get a financial penalty, and nobody wants that. So the best way is to stay on your quarters and file your tax return between the end of the 4th quarter and the start of the first one, and not leave it until January. So that is the standard. This is the calendar update periods for people whose year end is the 31st of March. And as you'll see, the deadlines for actually filing are the same. The only difference is the period ends are a few days earlier, so they end at the end of the month. So they end on the 30th of June, so I'd file that in July. These second quarter ends on the 30th of September, then the 31st of December, and then obviously the 31st of March. So you just have a few more days from the end of the period to the filing deadline if you are on the calendar rather than the tax year version, the standard. But otherwise, it's all the same, really. You get a month and 7 days to file. But if you try and keep it within the month, then you just give yourself a little bit of a safety net for life. And that is basically it. Now, there is quite a complicated point system for penalties, and I will talk about that in another video. We won't get bogged down by that right now, because hopefully none of you will ever need to go anywhere near the point system for the penalties. Just remember that what you need to do is have digital software for your income and expenditure. There are many, many different versions of that out there, and it's going to be a personal choice. So run a few trials. See which one feels intuitively better for you. As I say, my practice, I use Xero for nearly all of my clients. That's my preference. Most of my clients don't really care which software they're on, because they're not the ones that are using it. I am. But if you do your own tax returns and you're going to be doing your own quarterly returns, then it needs to be a software that you're comfortable using. So try a few out. Don't be led by somebody else who has their own preference. We all like what we like. And you never know, you might find a really good cheap one that works just the way you want it to be. All of the different leaders in accounting software are coming out with MTD specific versions that are a little bit less expensive, because a lot of people who are being brought into this don't currently use software. So it's going to be a big change for them, and it's going to be another expense. But it is a business expense, so it will come off your profit. So bear that in mind as well. So digital records, quarterly filing returns in July, October, January and April, and a year end that you're going to file in June or possibly July if you have a P11D that you know you're going to get from your employer if you have one. And that's it. So there you have it. There's MTD for income tax in a nutshell. Obviously there's more nuance to it than that. There are other details I haven't covered in this video. I could probably waffle on for ages, but I'm not sure that that benefits me or you at this point. So let's go with what we've got. Let's just get the basics and get comfortable with those. Your homework, if you're not already on software, is to try a few and see which ones you're most comfortable with, including their price point, and see how you get on with that. But let's just start getting organised, and if you've got questions, pop them in the comments. I only ask that we please are just kind to each other. We've all got a lot to learn because MTD for income tax is completely new for everybody. If you are quite on top of things with your bookkeeping for this year, then maybe consider going on the trial. There's no penalties during the trial phase, so if you sign up before you need to, which you could do through HMRC, I will find a link for that and pop it in the show notes too, then you can have a go at getting comfortable with it before there's any risk of late filing penalties. That's a personal choice as well, but you can, in the background, be just getting prepared. So if there's anything else that you particularly need help with on this, as I say, pop it in the comments. I will answer your questions to the best of my ability. And if I can't answer them, I will try and find you a resource that can. And let's just see how we get on. Big changes for some people, but you can do it. If you're running a business, then you can handle this. It might be a bit of a change and it might be a bit of a pain, but you can do it. I'll see you on the next one.